The Post-Humira Powerhouse, a comprehensive guide to AbbVie, ABBV. As of March 17, 2026, AbbVie Inc., ticker ABBV, is a case study in pharmaceutical resilience. For nearly a decade, the primary question surrounding AbbVie was whether it could survive the patent cliff of Humira, the world's best-selling drug. Today, that question has been answered with a definitive yes. AbbVie has successfully transitioned from a single product company into a diversified titan, leveraging its massive immunology franchise and strategic acquisitions to remain a cornerstone of both growth and income-focused portfolios. Earlier today, AbbVie stock traded around $219.68, reflecting a company that has not only absorbed the impact of biosimilar competition, but has also returned to high single-digit growth. For an investor today, ABBV represents a Dividend King status in spirit, as a spin-off of Abbott, with the growth profile of a mid-cap biotech. This deep dive explores the company's new revenue drivers, its high-stakes neuroscience pivot, and the financial vitals for 2026. 1.
The business model. Immunology and beyond. AbbVie's business is built on the philosophy of dominance through lifecycle management. When it became clear that Humira would face competition, AbbVie didn't just look for one replacement, they built a successor platform in immunology. The immunology powerhouse. While Humira sales are projected to drop to approximately $2.9 billion in 2026, a fraction of its $20 billion peak, AbbVie has successfully migrated patients to its newer blockbusters, Skyrizi, risankizumab, now the primary growth engine for the company. In 2026, Skyrizi is forecast to generate a staggering $21.5 billion in revenue. Its superior efficacy in psoriasis and Crohn's disease has allowed it to capture over 75% of the first-line treatment market share in several key categories. Rinvoq, upadacitinib, the oral counterpart to Skyrizi, projected to reach $10.1 billion in sales this year. Together, these two drugs are on track to surpass Humira's peak revenue, a feat many analysts thought impossible 5 years ago. 2. The neuroscience pivot. Following the $7 billion acquisition of Cerevel Therapeutics, which closed in late 2024, AbbVie has become a major player in psychiatry and movement disorders. The neuroscience portfolio, including Verilar and the newly launched Vyalev for Parkinson's, is expected to deliver $12.5 billion in sales in 2026. 2. The 2026 catalyst, the Wave 3 pipeline and M&A. The most significant news for ABV investors this year is the acceleration of its oncology and neuroscience pipelines. Expanding the arsenal. In late 2024 and early 2025, AbbVie moved aggressively into antibody-drug conjugates, often called biological missiles for cancer. Elahere, acquired through the $10.1 billion ImmunoGen deal, this treatment for ovarian cancer is currently seeing a blockbuster ramp-up, with analysts expecting it to become a primary oncology driver through the end of the decade. Emraclidine, a cornerstone of the Cerevel acquisition, this next-generation psychoantipsychotic for schizophrenia is entering late-stage registrational data phases in 2026. If successful, it could redefine the multi-billion-dollar psychiatry market. Research and development R&D investment. Management has maintained an R&D profile of 14% to 15% of total revenue. In early 2026, the company is funding over 90 clinical programs, ensuring that the post-2030 patent cliffs, when Skyrizi and Rinvoq begin to age, are already being addressed today. 3. Financial performance, guidance, and dividends. AbbVie remains a total return favorite because it pairs high single-digit revenue growth with one of the most reliable dividends in the S&P 500. Key financial benchmarks as of March 17, 2026. 2026 revenue guidance, projected at approximately $67 billion, reflecting 9.5% organic sales growth. Adjusted EPS, management expects between $14.37 and $14.57 for the full year 2026, representing a double-digit percentage increase over 2025. Dividend yield, the forward dividend yield stands at roughly 3.15%. On April 15, 2026, the company will have its next ex-dividend date for a quarterly payout of $1.73 per share. Total return. Since its spin-off in 2013, AbbVie has delivered an average annual total return that significantly outpaces the broader healthcare sector. 4. Sector dynamics, the IRA and regulatory hurdles. As your investment researcher, I must highlight that the pharmaceutical sector in 2026 is navigating a new normal regarding drug pricing. The Inflation Reduction Act, IRA. The primary regulatory risk for AbbVie involves the U.S. government's new pricing negotiation powers. Drugs like Imbruvica for blood cancers have already seen pricing impacts. In 2026, the focus has shifted to how the government will negotiate biologics, like Skyrizi, in the late 2020s. AbbVie has mitigated this by diversifying into aesthetics and neuroscience, which are less exposed to Medicare pricing negotiations. 2. The aesthetics challenge. AbbVie's aesthetics unit, Allergan, remains a global leader with Botox Cosmetic and Juvederm. However, in early 2026, management has noted that economic headwinds and weakened consumer sentiment are impacting category growth. The aesthetics portfolio is forecast to be flat at roughly $5 billion this year, acting as a slight drag on the otherwise high-flying immunology segment. 5.
Critical risks. What to monitor this month. Even with its successful turnaround, an investment in ABBV carries 3 specific risks that could trigger a 10% correction in mid-2026. Biosimilar intensity. While Skyrizi and Rinvoq are winning, the rate of Humira's erosion could still accelerate. If PBMs, pharmacy benefit managers, move to even more aggressive exclusive biosimilar contracts in mid-2026, the tail of Humira revenue could disappear faster than management projected. Pipeline failure. The Cerevel and Immunogen acquisitions were expensive. If emraclidine or the latest oncology ADCs suffer a phase 3 clinical failure later this year, the growth premium currently baked into the stock price will likely face a sharp reset. Debt leverage. To fund its acquisitions, AbbVie has maintained a net debt to EBITDA ratio around 2.0x. While manageable, any sudden downturn in cash flow would limit the company's ability to continue its aggressive share buybacks or mid-single-digit dividend hikes. 6. Strategy. How to position ABBV today. In March 2026, the consensus on AbbVie is a moderate buy, with some analyst price targets reaching as high as $289. The core income strategy. The IRA 401k anchor. Due to its 3.15% yield and its 14-year history of increases, ABBV is a premier choice for retirement accounts. It is a sleep well at night, swan, stock, because its core revenue, autoimmune diseases, is non-discretionary. Patients need these drugs regardless of the economy. Technical support. Technically, the stock has shown a strong support level near $215. For a new investor, nibbling, buying half now, and adding to the position if it touches that support floor is a logically sound strategy. The growth perspective. Investors should look at the combined market share of Skyrizi and Rinvoq. As long as they maintain over 60% of new patient starts in inflammatory bowel disease, IBD, the company's 2029 revenue targets are likely secure. Conclusion. The diversified titan. AbbVie in 2026 is a company that has successfully beaten the odds by flawlessly executing the launch of its Humira successors and spending billions to build a world-class neuroscience and oncology pipeline. It has removed the single drug risk that used to haunt its valuation. The verdict. You aren't buying AbbVie for a moonshot tech discovery. You are buying it for its commercial execution and its status as an income machine. If you believe that the future of medicine is in personalized immunology and advanced cancer therapies, AbbVie is the gold standard for your healthcare portfolio.